Hey, this is Mike Diercksen from Proactive, and you're listening to the Building Bite podcast. Tune in as we spotlight our guest, Tyler James, Midwest Regional VP of Construction Property at Zurich North America. Our episode is centered around accelerating change in the marketplace, the evolution of builders' risk coverage. For more information on this episode and others, please check out the Building Bite at www.buildwithproactive.com.
Welcome to the Building Bite podcast, a podcast for construction contractors, owners, and insurance professionals, where you'll hear from the experts about key topics that will help you be successful. I'm Chris Epps, a senior director with Proactive, and I'm joined here with my co-host Mike Diercksen, our manager of marketing and business development. And our guest today is a leader in the builder's risk space, Tyler James. Tyler's Midwest Regional VP of Construction Property at Zurich. Tyler, how are you this afternoon?
Doing well, guys. Thanks for having me.
Mike, how about yourself?
Doing great, Chris. Really excited to have Tyler on and get this going.
Yeah, likewise. Tyler, thank you again for joining our show today. Definitely a real pleasure to connect with you. Before we dive into our main topic, we were hoping you could tell us a little bit about yourself, your background, and let our audience kind of know how you got to where you are today.
Yeah, absolutely. So I was telling Mike before we started recording here, I went to the University of Illinois, which it's a big time of year here for college basketball and whatnot. So I'll be cheering my Illini on later today. But started again at the University of Illinois. I went to CNA originally out of school, had a finance degree from Illinois, and realized pretty quickly I didn't want to get into accounting or banking. So I think insurance was the next natural place to fall. And at the time, CNA, headquartered here in Chicago, had a really great underwriting training program. So started kind of in the middle market space, learning all lines. There's a great rotational program that I think they still have going today, if I'm not mistaken. But spent the first kind of three and a half years of my career there. Got hooked up with a great manager there who got me into the inland marine space. And really, the start of that was trying to learn how to build and develop relationships with clients. So there was no particular draw to inland marine other than, I was always fascinated with construction and building, but was really happy to kind of fall into that area and stuck with it and really liked it, liked the pace of it, liked how much we were engaging with clients, the uniqueness of each risk that we were seeing on the builder's risk side. So really kind of fell in love with it at CNA. And then realized after, again, three and a half years that wanted to try my hand on the broker producer side. So went over to Gallagher via a relationship I had made while I was at CNA with one of our producer partners there. Another large organization headquartered in the Chicagoland area, right? So I spent a really quick 10 months at Gallagher and realized that my talents were best served on the carrier side of the business. So actually rejoined my old manager from CNA over at Everest. And really the change there was looking for something different than what I had experienced at the big companies. Everest at the time was, in my eyes, was more of a reinsurance type company. They were starting up a P&C group and really building an inland marine practice from the ground up. That was going to be based in Chicago. So when I started there, I think we had, maybe $1 million of ancillary premium on the books, and we're really looking to grow it. So that was a really cool experience because it gave me a kind of a window into building a book of business and getting involved with staffing and building an underwriting appetite and what kind of business we were going to go after. It was also unique in that because we were just getting started, I had a really cool window into the E&S side of the business. So we did a lot of wholesale business and retail business, which, starting my career at CNA was very retail oriented carrier. After about 3 years at Everest, again, through a connection I had made on the broker side, moved over to Zurich, which is where I've been for the last 3.5 years. So as you mentioned, currently the regional manager for construction property here in the Midwest, and really, really loving my experience here at Zurich. It's a fantastic organization with a broad appetite, and we've got a lot of ability to write different risks and kind of get in the weeds with technical risk and large project risk. So that's really been interesting over the last couple of years.
I think the thing I pulled out of that the most, Tyler, was you are in a rare category of people that chose insurance, right? Yeah. Most times you talk to someone that, I fell into insurance. I don't know. My friend's uncle got me a job. And you're like, nope, I didn't want to do finance. I went for insurance. And it's really awesome that you kind of built that career out of that.
I'd be lying if I didn't tell you that I had family in the business as well, but so I did
Okay.
have some familiarity
So
with
you were
it.
you were pre-exposed to insurance as a whole, but
Yeah, exactly. But I mean, as I said, the inland marine side and builder's risk, construction property, what I'm doing now was really not something I was even aware of, right? Getting
Right.
into the industry. And what I found quickly was that, and again, in my opinion, it's one of the most fascinating areas of the business. It's obviously a niche that has worked out really well for me in my career, but I really find how dynamic it is to be really fascinating. I mean, no two projects are the same, right?
Right.
We're seeing different things all the time, and I know we're going to get into this later, but kind of the speed at which things happen in this space is really, really stimulating for me. And it's kind of, again, it's something new every day. So,
Yeah. No, exactly right. And I guess at that point, diving right into our main topic, accelerating change in the marketplace, the evolution of builders risk coverage. So, Tyler, we talked about this earlier on. I think you had a great breakdown, right, about that evolution you're seeing in the space. We focused on project size, materials, scope, and occupancy. So maybe leading off with that project size, how are you seeing that evolution? What's the change you're seeing, again, with that project size?
yeah, so I mean, projects are getting bigger, right? I think anybody that turns on their TV or the news at night sees, inflation is creeping into all aspects of the economy. Construction materials and costs have been going up for quite some time when you look at things like labor and whatnot. But with supply chain issues that have been happening over the last few years, we've really seen project values going up significantly. I think when you overlay that with kind of some macro trends that we're seeing, whether it be, in infrastructure or electric vehicles or onshoring of manufacturing that's been going on the last few years, we've really seen kind of the mega projects balloon. I tell a lot of our broker partners and clients this every chance I get, but I think going back to 2019 when I joined Zurich, and then even into the beginning of 2020, the $1 billion project was kind of an aberration, right? We didn't see that very often. When we closed out our books in 2020, just the Midwest region, which is the region I oversee here, we saw close to $20 billion projects come across our desk in 1 year, right? So, I mean, you think about that, it's incredible. And then, when I take stock of just the last 3 years in general, right, everything that the whole world's gone through, but the construction industry and the US economy and, what technology has done. I mean, the fact that we're all having this conversation right now, the way we are, right? How that's trickled into the construction business. It's just really the pace at which things are changing feels like it's just accelerated so rapidly. When I go back to the early days of COVID or even, just leading into COVID, right? We were seeing so many high-rise office buildings and residential kind of traditional four wall. It was incredible to see the shift that all of our clients made to data centers, electric vehicle, renewable energy type projects, distribution facilities, right? As everybody was ordering groceries to their house. So the construction industry always impresses me with how resilient it is. And I think when you marry the insurance industry and the construction industry, I don't think either have been accused of being quick or good with change probably over the last 100 years, right? But I've been incredibly impressed with how our clients have adapted. And as we continue to have a dialogue with them about these new large projects that are coming across, we're trying to adapt just as quickly as they are. So it's been a really stimulating last few years for sure.
Yeah, and Tyler, you kind of touched on this a little bit with materials. And I know we've had lots of podcast guests on over the last 2 years talking about supply chain shortages and material escalation, and I would say typical things that we've seen through and coming out of COVID in terms of evolution of builders risk coverage. Are there things you guys are seeing beyond that, additional factors changing the material aspect of those projects?
Yeah, I mean, I think a push for sustainability, right, is really driving the types of materials we see being used in traditional construction projects, right? So you think of CLT, mass timber, is a construction material that has really picked up steam in the last couple of years. I think you're seeing it, even aesthetically in some buildings. You're seeing structural components being used in major projects. So that's something that I think we're going to continue to see pick up. Part of the issue with that particular material is the manufacturing of it, right? A lot of that has been done overseas historically. We're starting to see more facilities come online here in the US that will be able to provide more supply of CLT and mass timber products to the marketplace. So I think that's just going to increase. So the response that the insurance carriers have to that, right? I mean, there's a number of different coverage rabbit holes I could go down in terms of the exposure that's presented with CLT mass timber. You constantly hear the argument, how is it better than frame? How is it different than frame? Things of that nature. Won't go into that today, but what I will say is that the industry is trying to respond, right? And I think the more dialogue we have with our clients about the experience that they're seeing on jobs and potentially losses that they're having or whatever, the more we can craft coverage language that fits that need. We're doing that here at Zurich. We've got a CLT mass timber builder's risk product that's specific to, that construction material that we think addresses a lot of those, types of questions. But it's an ongoing thing, right? As I said, that material has existed for quite some time, but again, in terms of how much it's being used, it's picking up quickly. So there's a lot that we don't know about how that material is going to perform long-term or in different types of weather conditions or with different occupancy types, right? Or different project types. So that's one example. Sticking with that sustainability theme, right? I mean, we're seeing different construction materials being used on projects. And I think this kind of goes into another point that we were talking about, project scope, right? And that's, solar panels are being put up on almost every manufacturing commercial building that we're seeing, right? So there's a solar component to a lot of projects that we would never think of in the past as having solar exposure, right? A lot of these electric vehicle plants also have associated solar fields next to them or something of that nature. So it's not just brand new materials being used, but it's materials being used in different places and in different ways than what we've seen in the past.
Gotcha. And I think that dovetails into, you're talking about evolution of different types of projects and growing size of projects, which obviously would impact, scope of those projects and also scope of coverage. Are there any examples or scenarios perhaps you could give us some of your experiences there where that's lent itself to providing some synergy and coverage, I guess, for lack of a better way to describe it, or maybe even the converse of that, some hiccups or speed bumps you guys have had along the way?
Sure. So, I mean, on the positive side, right, I think larger projects innately are going to have a certain uniqueness to them that you don't get on $100 million. Again, I'll use a high rise, right? I mean, we've seen thousands of those projects every year over the last decade. Very familiar with kind of the scope and the exposures there. When you get into these $1 billion plus projects, or I'll even say, $500 million plus projects, they all have little aspects of them that are unique that perhaps require unique coverage offerings. So sometimes that can be as simple as increased sublimits for transit and temporary storage, depending on how a contractor is buying materials for the job, right? We touched on supply chain. We were seeing that a lot over the last couple of years of contractors going out and buying materials way ahead of when they would in the past and storing them. Well, that presented a unique exposure that we had to underwrite to. So that's kind of the basic side, right? The more complex side is coming up with completely new coverage language that helps address certain exposures. So, you go back to the CLT topic we were talking about, offsite assembly and bringing materials to the site already constructed. You'll hear the phrase modular construction used, right? I don't like to say that modular construction is present on every job site, but I think there's more and more offsite assembly going on even your most vanilla construction job than ever before. So how do we address that? And I think, again, going back to communication and dialogue, I think the more time we can have to assess those risks in partnership with our clients makes it easier for us to craft coverage that fits that need and get comfortable with what that exposure is. On the flip side, when you look at renewable energy, for example, and solar, there's kind of new coverage language making its way into the marketplace and becoming market standard. Things like micro cracking and serial loss limitations that you're seeing, again, become more industry standard. And I think, we were having a conversation recently with one of our clients where we were really digging into this micro cracking wording that Zurich and many other carriers are using. And the client was explaining, hey, well, we have this exposure and this is something that we're really uncomfortable with and we'd like to get coverage for. And myself and my underwriting team sat there and said, hey, listen, I completely get why you're worried about this, right? We all acknowledge that this exposure exists. The struggle that we have is quantifying what that risk is or what that exposure really is.
Especially with no historical actuarial data around losses.
Right?
And
yeah, the industry operates on 50, 100, 150 years of knowledge and kind of institutional knowledge, right? And when the pace of change is accelerating and technology is just causing things to change so quickly, we now operate in a world where, again, we as carriers have to start to understand that we're not going to have that on everything. So that's where that dialogue becomes so important. But I think clients and brokers also need to come to the table understanding that as underwriters, when we can't quantify a risk, the industry and what we're built to do is to assume the worst case scenario, right? And usually what that means is really, really high costs. And, we're going to try and protect our capital. So we kind of get to a point where not every exposure is really insurable, nor do I think our clients want it to be an insurance requirement, right? You look at things like quake in California. If all of our clients had to buy full quake limits on every project that they built, nobody would be able to afford to build anything in California, right? So I think coming to the table and saying, how can we as underwriters understand the exposure and quantify it, right? Assign a value to it and a probability of that occurrence happening. How do we do that? The answer is transparency with our clients and really understanding kind of what they're doing, what they're worried about. And, I would say the vast majority of the time we come to a really great middle ground or a really great understanding of this is what our intent is to cover. Client knows what that is going into, binding the policy and everybody walks away happy. So the situations that we always try to avoid are that where client thinks one thing is covered and carrier thinks it's not, or maybe it's covered in a different way. And that's never good when you have that claim scenario.
Yeah, I mean, insurance is the transfer of risk, but that doesn't mean 100% transfer, right? There's a grade there, and you mitigate that risk and you share that risk, and that's why it has to be a strong relationship, right, with good communication to understand here's kind of where we've drawn the line on X topic, right? We're going to take this much risk, you take the rest, and to go 100%, while that might feel good, like you said, it's not necessarily business viable. So it's about finding that middle ground, right, about what the coverage brings.
Yeah, and I would say our broker partners are really key to that as well. Our strongest relationships, I would say, are with broker partners that really encourage that connection between the direct client and the underwriter and facilitating a discussion. I mean, it's very rare we get face to face with a client and we can't come to some type of mutual understanding about what our intent is and what their ask is and find a way to craft a solution for these unique projects. Because again, a lot of times we're being fortunately put in a position to be a consultant, right, with our clients because they don't have 30 years of experience on some of these projects either, right? Or COVID has required a lot of our clients to push the boundaries of the geographic regions that they're working in. Or again, maybe they did traditional warehouses in the past and now they're being pushed into more distribution facilities, which involves work with different types of machinery and equipment that inside the building than what they've had to install in the past or little things like that, right? So I think that's why I would also say it helps. I mentioned off the hop, I've really enjoyed my time at Zurich because of the breadth of capabilities that we have. There's not many things in the builder's risk space that we haven't at least seen. Our risk engineering team's second to none, our claims group is second to none. So it's very rare that there's something that a client would bring us that, maybe we haven't written 20 of these types of projects, but maybe we've seen 20 and we've written 5. So I feel like we have the ability to bring the right experts to the table and have a really good dialogue and, again, craft a solution that works.
Yeah, excellent, excellent. And sound advice, Tyler. I mean, honestly, it comes back to efficient and streamlined communication, right? It's a common theme we see across all these podcasts is you can have the right process, you can have the right team, but if you're not communicating efficiently, it's going to fall through the cracks. So,
Absolutely.
From a risk management perspective and a project standpoint, it's very important. But I think the last thing we talked about, which kind of caught me by surprise a little bit, that evolution was occupancy. So what do you mean by that when you're seeing different occupancy within these projects?
So to me, it's a couple things, right? I mean, you look back at mixed occupancy projects, right? And the classic is like commercial, residential, right? Think of your, apartment complex with the Starbucks, the dry cleaner, the, whatever it is on the main floor, right? I'm here in Chicago, every building's like that. So the industry is familiar with that. I think what we're seeing now is more, even in like the manufacturing space where you might have traditional manufacturing going on and then assembly, and again, like a distribution aspect to the risk as well. We're also seeing a lot of facilities getting expanded. So a facility that might have been there for 20 or 30 years is maybe doubling in size and adding a completely new type of work adjacent to make it kind of one 360 facility, for lack of a better term. I mentioned solar is something that we're seeing more and more. We used to think of that as its own bucket of project type, right? Think of solar fields in California or Nevada or wherever it may be. We're seeing kind of mini fields pop up, or the rooftop of buildings becoming their own solar field, right? So how do we think about that in rating a project that might be a manufacturing risk, but also has this other risk aspect that we now have to price for and provide coverage for? The word occupancy also lends itself to kind of project phasing and how a building becomes occupied and up and running as the project's going, right? So tying back to our original point of project size, when you look at it's been all over the news, right? Intel's building whatever it ends up $18-20 billion campus in Ohio. It's not like they're gonna spend 6 years building this $20 billion facility and then flip the lights on at the very end and it's all going to start becoming operational at the same time, right? There's going to be phases to that. It's going to become occupied. Different aspects of it are going to be occupied and operational throughout the life cycle of that project. And really understanding what that means from a coverage standpoint. Right. The last thing we want to do is charge a client for $3 billion of exposure for a 3-year period of time when really $1 billion of that is getting turned over to a property policy or something like that after 2 years. So we provide pricing credit for that if we can build that into the coverage wording and understand that. So again, these are all things that require kind of that next level of discussion beyond what's in the submission. We might get even we very frequently get a project schedule, right, where we can see, okay, it looks like there's going to be different aspects of the building turned over. But then you bring in the contract aspect and it's like, all right, even though this, we're doing a manufacturing facility with 5 assembly lines, even though lines 1 and 2 are done and going to be operational, our contract stipulates that we've got to insure it through project completion versus, hey, our contract allows us to turn over these completed values to the owner's property policy, right? 2 very different approaches might impact the amount of capacity we can offer on a project, might impact the deductibles and retentions we need on a project, right? So these are all really complex things that require discussion, and the more time, the better. Builder's risk tends to be the last line of coverage that gets put in place before the shovel goes into the ground. Sometimes it's even after the shovel goes into the ground. So we're used to working with 48-hour turnaround times and whatnot. But I think, again, like a conversation like we're having now replaces perhaps 20 emails going back and forth, right? So I really encourage my team, and I know our broker partners are supportive of getting everybody on the line and asking the critical questions. And sometimes it's, hey, we don't have a clear answer on that. Here's the assumptions we'd like to make. Let's move forward based on these assumptions, right? And we can figure it out in the days to come. So sometimes that's acceptable depending on how critical the info is. But yeah, occupancy both in phasing and in and occupancy are both critical.
And it sounds like all of those changing elements, scope and size of projects, materials, occupancy, types of projects, all of that rapid change, coupled with the fast pace of just builder's risk coverage anyway, lends itself to that kind of dynamic, quick durations, like fast pace of the work you were talking about when we opened. If I'm asking you to get out your crystal ball and make some predictions, where do you see the builder's risk market trending over the short term and maybe a little bit longer term?
Sure. Well, I guess I'll start off by saying I've been in the industry doing builder's risk now for going on 12 years or close to 12 years. This is the first kind of firm market cycle that I've ever seen, right? So the first, call it 8-9 years of my career were soft market conditions, right? Rates were going down. More carriers were taking 100% of a risk. Bigger limits were being put out. We're now in a different time. So when I think of trends, I think sharing risk is going to continue to be a trend we see. And it's not necessarily because carriers are cutting back capacity. It's, again, because these projects are just getting bigger quicker than anybody ever thought, I think they would. It's just going to require more participants, I think, on these mega projects. And what that lends itself to is kind of market consensus on terms and conditions. I think you bring in a kind of an underwriter's market or firm market, hard market, whatever you want to call it, over the last couple of years, coupled with these project sizes going up. You might have to have 3 or 4 carriers at the table to fill out a program. If all of them are saying, well, I want a little bit higher retention here, or I want a little bit lower limit there, or coverage wording needs to look like this, right? We're moving towards market consensus on some of these things faster than I think we ever were in a soft market, right? It was kind of, if you sent the same project to 5 markets in 2015, all you needed is to get one to say yes, and they were offering 100% of the project, and that was it. We're rolling, right? I think these things are going to take more time moving forward to get these programs filled out. Again, our broker partners are fantastic at doing it. It always amazes me how quickly they can get these things together and deliver for our mutual clients. So I would say that piece, sharing of risk, I think is going to be a trend. The project size is just going to, I don't see any reason why it wouldn't continue to increase. I think at Zurich, our average project size has gone up 30 or 40% in the last 4 or 5 years.
Wow.
That's a ballpark, right? It's something to that effect, but the point is it's alarming how quickly they've gone up. That's kind of the main thing I think about. I mean, I think these emerging risks are going to continue to present themselves just more regularly. I think there was a period early in my career where it did kind of feel like I had my arms wrapped around what was going on in the construction world. And I just think as we continue to onshore more manufacturing, infrastructure bill, right, that, whatever the hundreds of billions or trillions of dollars it was, as it makes its way into the system, we're going to see more modern rail, hopefully bridges, roads, things of that nature. The reality is it's been decades in some cases that we've done major infrastructure projects like some of the ones coming down the pike here. So I think that's going to present new challenges as we build modern bridges and things like that. A lot of these construction projects are going to be things the likes of which we haven't seen in the insurance space, perhaps in a very long time or maybe ever. So I think that's going to be something we all have to grapple with as well.
Yeah, truly the only constant is change, right? That it's going to grow and the pace at which is increasing. So Tyler,
I would just say too, just to put a ball on the risk sharing idea again, I think that's very healthy in a lot of ways, right? For the industry. I mean, the sharing of risk is what keeps all of our carrier competitors and Zurich around. When those big claims inevitably, I mean, builder's risk is innately a severity-driven class of business. We pay large claims is kind of what it boils down to. When things go wrong in these projects, generally they're not small problems, they're big problems. And I think the more you can share that risk as an industry versus it being focused on, 1 or 2 carriers and then that capacity, inevitably goes away or whatever, I think it's just healthy to have more carrier capacity in the marketplace for our clients. I think it's going to be a good thing in the long run.
Yeah, agreed. And, Tyler, this has been such a great dynamic conversation. We really appreciate you taking the time to speak with us. One of the things we like to do on the show is always to give our audience some takeaways. So keeping in mind that the audience is primarily made up of owners, contractors, insurance professionals, what would you say the 3 big takeaways should be for them listening to the show today?
Yeah, I think we talked about it briefly before we started, but like transparency is king. I think there's this misconception that with certain individuals that like, hey, I don't know if I want to share that with the insurance company, or if I say this, is it going to be looked at negatively? I mean, that's never been the case anywhere I've worked in my career, the 3 carriers I've worked at, right? More information is better. I think I said it earlier, but as underwriters, we're taught if we don't have information, assume the worst, right? And I think that gets missed or maybe misunderstood, I should say, at the client level. I think the more we can understand, the better coverage we can provide at a better price, right? Better terms and conditions. I think I also really push with my team, like understanding the why. A lot of times we get blind pushback or blind requests for, hey, we need this limit. And that might be completely outside the scope of what we normally would see for something similar. And for us, it's like, okay, well, where's this request coming from? It doesn't necessarily mean we can't do it, right? But if we can understand it, I can promise you we're much more likely to be able to do it. So information and transparency is king, I think is what I would say. And never hesitate to pick up the phone or jump on a video call and talk through it with your broker partner and your underwriter if you can, to understand what angle everybody is coming at the project from and what they're seeing. I think that always helps.
And Tyler, I guess, what about an action item? If our listeners were really looking to start working towards some builder's risk solutions in this changing market, what's the best starting place? Where should they be looking?
Yeah, I mean, I think all the content, I'll just say the contractors we deal with skew to be larger in size, right? So I'll probably answer from that perspective. I think every construction organization is structured slightly differently, but we've had a lot of success with clients that can really engage from kind of the bid phase all the way through project completion, procurement and completion, and really working with the project managers to understand how the insurance coverage responds and how the P&L works on each individual project, right? Some of our large clients manage certain risk at a corporate level. Some of them manage it entirely at the project level, right? So project manager is responsible for the deductible and the P&L on that project, and they can't force them to do. I think, whether it's renewal time or whether it's a stewardship meeting with your carrier or broker, just taking a look at how do we place builder's risk and trying to be strategic about, are we placing the coverage? Is the owner placing the coverage, right? What are the advantages of us maintaining control of that coverage as the contractor, right? If we get to a place where we feel like we can do that and we want to do that, which would be my recommendation, obviously, how do we go about doing that? How many projects are we going to be placing a year? What's the size, right? Whenever a master program can be put in place, I would always recommend to go that route. It allows you to develop a deeper relationship with the carrier, best in class pricing, terms and conditions because of the volume of projects. So whenever you can go master versus a one-off placement, I would say that's the route to go, or at least engage in that discussion, explore that option, I think is a great route to go. But really, we encourage all of our clients to sit down with us at least annually, but let's talk about what's in the pipeline, right? What do you have coming up so that we can help identify, okay, that project we want to zero in on. We think there's going to be challenges because it's in Florida, or we think there's going to be challenges because it's over $500 million and it's a really mega project, right? So how do we make sure we get coverage tailored specifically for that project? Or, hey, this is in a different jurisdiction than maybe you're familiar with, right? What challenges may that pose? Again, different scope of work than maybe you've done in the past, right? So all of these things, if we can sit down on an annual or semi-annual basis and look ahead, that's a huge, huge help for us as the carrier to be able to give our clients solutions just in time as they need them, versus, again, getting the 48-hour turnaround of, something we've never seen from this client before, and we're trying to tailor a solution with our hair on fire.
Wonderful. And Tyler, before we let you go, we always like to hit our guests with a couple of rapid fire questions. You kind of touched on or gave us sort of your work history in your build up to coming to work with Zurich. I'm sure you've had some great mentors along the way. It seems like you've gotten a very round view of the industry given your experience, but maybe a shout out to some of those mentors. Could you tell us any of those people helped you out along the way?
Yeah, absolutely. So, I mentioned earlier, family exposed me to the business. So I definitely would be remiss if I didn't mention my dad being in the industry and really exposing me to all the great things that the insurance business has to offer. I mean, I think it's a really a hidden gem in, I'll call it, the financial services world, right? I think most of us on the broker and carrier side have a laugh that how do we get so lucky to fall into this business, and why don't more people do it? So shout out to my dad for exposing me. But professionally, Matt Bizik was my first manager at CNA. Really, really fantastic leader in the inland marine property and inland marine world. I mentioned I rejoined him at Everest. So I think what's the adage? People work for their manager, not necessarily for the company. So I was definitely an example of that. I followed Matt from CNA to Everest and had a number of great years with Matt, learning not just the technical side of the business, but Matt's really a master of being solutions oriented, creative thinking, relationship building with broker partners and clients. So he really taught me the importance of that and kind of showed me the way there. And then more recently in my career and time at Zurich was Kelly Kinzer. So Kelly's a fantastic leader in the construction space. Obviously spent a lot of time at Willis and has been over here at Zurich for a little bit longer than I have been, I think 4 years now. So Kelly runs our construction practice here at Zurich and is really a fantastic leader and mentor of mine, somebody I look up to and somebody that really shows a ton of initiative with her team about really thinking about your career and, whatever job you're in now, don't just think about what the next job is, but 2 jobs down the line, right? Where do you want to be and how can we, or how can you position yourself to get there? And Kelly's a huge advocate for folks and trying to get where they want to be in their career professionally and whatnot. So she's a great trailblazer and somebody I really enjoy working with now.
Those are excellent, Tyler. And I guess it kind of leads itself into my question, which I don't know if you knew that, but if you had a professional tip for our viewers, like the number one thing, and maybe that's what it is, looking 2 jobs ahead, like what's the path? What would that professional tip be and why?
Yeah, so that's definitely something I would say that I've always tried to think about is not just looking at kind of the next role or the next opportunity, but how does what you're doing today, what you're doing tomorrow, how does that lead you to where you want to be 10 years from now, right? And I think a lot of times we forget about kind of that long-term vision. But I would say in general, and this kind of goes to a trend I've seen, I don't know if it's a post-COVID trend or I've been in the industry, it's crazy to say long enough now that maybe it's a generational thing as well. But I remember coming into the industry and loving the social aspect of our business. I mean, Chicago is a fantastic insurance hub, right? We've got so many great companies headquartered here and there's a great insurance community. So I remember early in my career really looking forward to, going to a happy hour or going to an industry event and meeting people from different corners of the industry, even not within property, not within inland marine or construction. And I find now that there's perhaps a hesitancy to really connect with people in different corners of the business. And, my career journey has shown me that you never know where somebody's going to be 2 or 3 years from now on the opposite side of the negotiating table, right? So really building that network of people and friends, mentors, whatever it may be in the industry that you can lean on in those moments of having to make a tough career decision or having to, make a decision on an account or something like that to be able to bounce something off of somebody. So don't just build relationships with your immediate colleagues or the person in, the next aisle over or within your organization. Really get to know reinsurers, wholesalers, brokers, clients, right? Because one example, I had a colleague here at Zurich that I've worked with we've now worked with each other on essentially every side of the transaction. So he's a reinsurance broker now. He's been an underwriter. He's been a broker. right? I've been an underwriter, been a broker. So like we've all, we've done every aspect of the transaction together. And that's a great relationship that I'll have for, hopefully the duration of my career. So it sounds kind of cliche to say, your network and relationships matter in this business, but it just time and time again, it holds true.
No, we definitely agree, and something I've seen as well, right? It's as big of an industry as it is, it can be a small pond at times. You see a lot of people and you never know where they're going to be. So definitely sound advice for that. One last question we ask everyone, this is the Building Bite podcast. That's building insurance technology with the experts. And you yourself are the expert today, but you're in Chicago. I mean, I know if it's me, it's an old style in Portillo's, but what is the bite? What are you going to have for lunch today?
So I'm heading to River North today to grab a bite to eat with some members on my team. And then we've got a few client events this afternoon for March Madness, as I said. So in terms of what I would like to take a bite into is probably something in the West Loop, some great food options out there. But it's probably going to be more bar fare for me this afternoon, truthfully, here in Chicago for the NCAA tournament. So the one thing I would say too, it's not a bite, maybe more of a sip, but exciting news here in Chicago. I think they announced Guinness is going to be bringing kind of a tap room here to Chicago. So I know everybody's excited for that to open over the summer. So if anybody's in Chicago over the summer, maybe go check out the new Guinness tap room they're going to be bringing.
Guinness is definitely different right from the source too. I've toured the factory, and it's a step up. I don't know what they do when they can it, but it's not the same.
No, definitely not the same out of a can.
All right. Well, Tyler, thanks for joining us today on the podcast. If our listeners want to hook up with you afterwards, where can they find you? LinkedIn, email, where's the best way to get a hold of you?
Yeah, LinkedIn's a great spot, Tyler James, and just tyler.james@zurichna.com for any kind of builder's risk related questions. We've got a great team here at Zurich nationally, and particularly in the Midwest. Really proud of our group and what we've been able to do for our clients over the last couple of years. So any questions about builder's risk related topics, CLT, mass timber, we've got a great parametric product offering we've been talking to clients about for some time now, but always willing to have those conversations.
Or Guinness tap room reservation.
Yeah, exactly.
Or
Guinness tap room, right?
If you happen to be
one of the two.
We could go.
One of the two.
Yeah, exactly.
Well, Tyler, we'll let you get back to your day. Definitely appreciate you taking the time again, and good luck to your Illini.
All right. Thanks, guys.
Thank you.
Thank you for listening to The Building Bite. This podcast has been brought to you by Proactive. Check us out on thebuildingbite.com, where you can subscribe to our newsletter and follow us on social media for all future The Building Bite news and updates. You can also find us on your favorite apps, including Apple and Google Podcasts, Spotify, Stitcher, TuneIn, and Amazon. If you have ideas for episode topics that we should cover on the show, or you know somebody who would be a perfect guest, let us know at connect@thebuildingbite.com.